Hey everybody, it's Jeffrey Scott, and welcome to my special broadcast here. It is late Sunday night, early Monday morning of Labor Day, and since Ron's wife has had surgery and Ron was not going to be doing his reports this week, I thought I would take advantage of the opportunity and record a short program, perhaps 30 to 40 minutes, reviewing my nightly review and my thoughts about the market for the week to come. For those who haven't been here before or don't know me, here's my email address. That's probably the best way to contact me. And no one's going to be calling in tonight because this is just really a one-on-one presentation. As always, the disclaimer, educational purposes only. Anything that we talk about, any stocks are for educational purposes only, and there's no don't follow my recommendations. It's only for education. I'm a doctor, not a broker. Those physicians lose their money. I'll use a couple of different tools today, but mostly HTSI. I'm not affiliated with any software vendor or trading company, and the tools demonstrated are those that I use in my daily trading. And as it says there, I've actually paid for everything that I use. So what I'll do is I like to look at the market and then quickly go through some top-down investing, things that I do to build my watch list, shortcuts, introduce you to something that those who've been to the Ian meetings are very familiar with, which is the meeting is called an E-index, which is really a topping index looking for the best stocks today, putting together in an index. And when that rolls over, it tells you to run for the hills. And then just to mention that next Sunday, I believe it'll be at 9 o'clock, I'll be sending a message out. I'll be giving a guest presentation about HTSI at magentatrader.com. Just want to, again, mention Woodward & Brown Investing. These are certainly these two individuals, Ian on the left and Ron on the right, have really educated me. And most of what I talk about today, I've learned from them, and I couldn't do this without their help. I'd also like to remind folks that the next HTSI meeting will be coming up in October, and I can't recommend it enough. It's just the best 3 days of education and investment knowledge and using software that you'll ever get for $1,250, which includes a lot of meals. Ian is truly he's a blessing for us, but he's really just an amazing teacher and brilliant technician. Don't know how many more of these he's going to do, and you don't want to miss that opportunity if you haven't been there, and even if you've been there before. The website, highgrowstock.com, you can see here. Most weeks, Ron will be doing his own report, and you won't hear from me, but here's his address for the weekly reports. And if you're not familiar with HTSI software, free trial software can be with data feed at this URL. If you go to highgrowstock.com, you can reach everything from the site. So before I jump in and we start to look at stocks, to me, the most important thing is where's the market at. And what I like to tell people is that this is the same in any time frame. It's whether I'm looking at indices, stocks, ETFs, and it's the most important part of my analysis because I may give you a list of stocks that I think are interesting for Tuesday morning, but it's Sunday night. I have no idea what the market's going to look like on Tuesday morning. And those that have been active in the market recognize that this is a market that's all news-driven. So rather than guess, I'm just going to come up with a watch list of things to look at, whether long or short, and then we'll see what the market gives us. To me, we're living up here in this stage of uncertainty. And what can happen is this market can roll over, which many folks, including myself, expect that. September is typically a bad month for the market. Or we get a little bit of quantitative easing or even talk of it, and it becomes a pause to refresh, and it goes up. So you need to know where you are in the market before you place your bets. And then, as I often say, and as I looked at charts today, again, it's so important to me, and as you need to know what your stock is doing. And the reason people say don't fight the trend is it's impossible to fight the trend. In an uptrend, you buy on pullbacks. Now the nice thing is, in a good uptrend, you buy anytime and the stock goes up. You may have some pain with the pullback, but if you buy at pullbacks, you know where to set your stops, which is right below the point of the pullback. And certainly it's a low-risk purchase. In a downtrend, where do you go long? Well, you can only go long in these retracements, but these are very short-lived. Unless you're in the market all day long, you'll get whipsawed and stopped out and you'll lose your money. Frankly, there's no time to buy long in a downtrend. And if you are interested in playing the short side, like we talked about Intel on our last call, it doesn't matter as much where you buy in a prolonged downtrend, but these things happen very quickly compared to uptrends. And the best time again would be buying a retracement where you can set, or selling a retracement rather, and you can set your stop right above that point of the retracement. Over the last several months, I've also felt that we've been living at times in this scenario, sort of a Darvas box, range bound, where I want to short at the top, buy at the bottom, recognizing at some point I'm going to break above or below this, and that's going to change my point of attack. Lastly, if you find this type of a presentation useful, on the website are numerous presentations, some by me, some by Ian and Ron themselves, and some by a host of other characters, including Dave Steckler, who did a great presentation on the bongo not too long ago. For those who've been following Ron on his weekly reports, they're outstanding. Every once in a while, as he's certainly allowed to, Ron takes off a week or two, often traveling. And so one of the thoughts I had that sort of stimulated today's program and a discussion with George Roberts is perhaps when we know in advance that Ron's not going to be able to do his report, we can have a guest speaker and record a small presentation. So before I jump into the charts, be your own guru. Investing is a business. Make sure you have the right employees. To me, those are my tools and my software. Continue education matters. Please come to PV and trade the market we have, not the one you think we should have. So let's back out of that. And although I'm going to live in HGSI, let me shut this side down. And I'm going to look at a couple of other things as we go. So the first thing I do is I open up either open up the designer or the warehouse. I'm going to open up the warehouse view. And I'm going to go here and look for Ian and Ron's Woodward and Brown Users Group. I'm going to open it up. I'm going to bring in Major Markets Plus. And I live in mostly in a small number of views, and when I look at indices, as I've learned from Ron, I look at the top-down analysis. For those who are not familiar with these different views, the views combine a filter which identifies what you're looking at from the large list of stocks and other instruments, and the combo ranking ranks them. And this is one that looks at, as you could see in the combo ranking, let me get here and just edit it. It looks at 1 and 5 day price change, so technical. It looks at 2 and 13-day force, also technical, but giving me a little bit longer time frame. And then accumulation and distribution and the change of that over time. So this is purely technical. It's a balanced, not just what happened the last 2 days, and includes volume as well, which is a component of the force index. So I've ranked by raw combo, or I will right now. And what you could see is that a lot of the commodity-based instruments, gold, silver, gasoline, oil, the commodity index led this week, and utilities, transports, S&P 100, 1500, and 500 were at the bottom. One of the drivers for the commodities leading would be weakness in the dollar, and one can see in the UUP, as we will set up here. All right, where did that go? Hold on a sec. Sorry about that. As one can see in the UUP, And let me just point out a couple. Well, first we'll talk about how the price is broken below the 200-day moving average for the dollar. And that may be pretty profound. As you could see, let me bring in some more. The dollar has been support many times. It did knife down through here. So it may quickly get back above the 200-day moving average, but if one goes out far enough, you could see that once it gets below the 200-day moving average, it seems to travel quite a bit underneath it, and it turns into resistance. So be interesting to see what the dollar does. Now, what does the dollar mean? If the dollar is weak, stocks usually go up, commodities go up. If the dollar is strong, commodities go down, and stocks go down, at least of recent times. I'm not going to go into much education today, but these are all different momentum indicators I use up there. And people who've been on my webinars will notice that I've added a high jump indicator, and I'll use that on some of the stocks. So the dollar clearly is weak, and that should mean that certain things like gold are strong. And you could see here sort of the opposite picture, where gold, which has been living underneath both the 50 and the 200-day moving average, going back to March, broke above, pulled back to the 200-day moving average on Thursday, and on Friday traded up with a big kahuna. And if you look at the moving average of volume on big volume, so gold, all the things are green. On the high jump indicator, of which I'm not sure the validity of the high jump indicator on something like gold, close to the top, but not as close as it's been in the past. So gold definitely looks very bullish. Silver, same picture as gold. And if we look at some of the other, probably the strongest of late has been gasoline. Hopefully you've owned some refiners. We've talked about them several times on our webinars. Extremely high. Big kicker signal back here, going back in late June, and it's a big move up, tracking above the 17-day moving average the entire way for the gasoline index. On my charts, the purple is an 8-day exponential, green is a 17-day simple, blue is a 50-day simple, and the red is a 200-day simple. You also got a golden cross back several days ago. So very strong. We take a look at some of the indices. The weakest one here looks like the S&P 1500, which is a combination of all of them. And one can see it's really, I mean, I'm not sure I would call it weak, except it's pulled back some. Now, I'm not the best at trend lines. I'll never be as good as Ron here. But if you start to put some trend lines on this thing, and I'll take some liberties with where I put them. Oops. You're sort of in a slow trend up, and you're down at sort of the midline. So could bounce from here, but might also pull back. So the S&P 1500, which represents all the major S&P, the small cap 600, the 400, and the 500, the mid caps being the 400s. Look at the S&P 500. You'll see a similar picture of a slow move up, sort of oscillating in a channel. And you could see I drew this one earlier today, and wondering if that channel might be changing, and we'll see if it bounces or not. Certainly this is not a line that has much validity right now. The NASDAQ, perhaps the strongest, which is nice to see, especially since the small stocks have been weaker, and you could see it sort of come to a stop up here. Now, a couple things that I like to look at when I see these charts. One of them is recent high is up here. So we've got a little bit ways to go on this. High jump is not extended. So we pull back to the 17, and I feel, okay. I mean, I have to say, when I look at a chart that looks like this, it's hard for me to be majorly bullish on the status of the stock market because they're all down here. On the other hand, if we continue to see dollar weakness, I think we're going to see some activity in the market. I'm going to go out of the program very quickly and show you two other parts of the evidence that I find interesting. An edge rater is a great way of doing gramless pies. And I use edge rater to give me a sense of what the market is doing. This is looking at the stocks in the S&P 1500 and looking to see within the Bollinger Bands below and above what the distribution of stocks are. And in a good period of time, clearly 70 to 80% are above the mid-band at 0.5. And what I see here is just it's a 50-50. I mean, it couldn't be, well, it could be 2 points different, but it's almost spot on 50-50. Very little stocks above and below the Bollinger Bands, and really just spread out between 20% and 80-90%. So this tells me a market in indecision. Another thing I find interesting, and I've looked at it on several different things, is the Commitment of Traders report that I like to look at on TradeStation. And so you can see we're now Sunday at 1 a.m. Those who know me, it's still early for me. You can see that the futures are really doing nothing right now. I like to look at the Commitment of Traders report. For those who haven't seen this, and I've learned this from John Person, so I give him all the credit, plotting a weekly E&S, the S&P futures, and I'm going to pay attention to the blue and the yellow. The yellow represents people like us. It represents non-professionals, while the blue represents professionals like hedge funds. And then the red, which we're not going to talk about, is commercials. And the commercials would be, for example, the TV commercial about CNBC with the guy, a cowboy, talking about he uses CNBC and he might do corn futures or something like that, or hog futures. And so some of the people who are in the business will potentially do calls and puts on futures around their product to hedge their price. So we're going to skip the red guys. So the first thing you notice is as the market fell in 2008, the blue, the professionals, were short the market, while us long guys were long them, or individual folks were long the market. At the market bottom, of course, there was a switch, and the professional speculators started buying, while the non-pros, the individual investors, etc., were short. Now, the interesting thing is, during pullbacks, the professionals went short, and really since the middle of 2011, there has been a lot of short interest within the professional speculators. Now, we haven't turned the corner, but I do wonder if we're not seeing initial evidence. As you could see, the blue lines are almost disappearing, and if and when we start to see them shift to the other side, that will be very exciting for me, because that will suggest that at least the professional speculators think that this market might be making a change. So I'm going to say that I am, as I was on the last webinar, I feel sort of directionless. My gut feeling is that the QE talk and some improvement in Europe will drive the market forward. But I do think that September may end up an ugly month. I think we are due a correction, and September is one of the weakest months. So that means smaller position sizes, more cash, less margin risk, and perhaps selling some in-the-money calls on some positions that I really don't want to sell for various reasons. Now, once I've looked at the status of the market, then I like to look, as part of my top-down investing, into industry groups. Now, before I start, you can see there's 142 different industry groups, and when I use the T1, which is looking at a fairly prolonged technical picture, that the biotech index is right at the top, and there's no surprise because the biotechs, as we're going to see, represent a large number of good stocks right now. But I really, as I do my top-down investing and I'm thinking about what I might want to buy tomorrow, what really matters to me is what's moved the last couple of days. So I'm going to rather set it from this to one of my other favorite views, it's 142 securities. We'll look at the force up, and now we've down to 73 securities. So these represent securities whose overall price has gone up times volume measured daily, so that multiplier, and I'll just show you that for the people who might be not familiar with the force index. Force index equals volume today times close today minus close yesterday. So if you're lower today than yesterday, it's a negative number, and if you're higher, it's a positive number. What can drive force is either volume or a big change in price. From history's sake, I can tell you that it's usually volume's a big driver, so diversified banks usually are the top of either the positives or the negatives based upon the change in price. And what you can do is plot moving averages, in this case EMAs, a 2 and a 13, which is the force index that we get from Alexander Elder. So when I do this, what comes right to the top, no big surprise, is the gold index. So what I'm going to do is I'm going to go through probably the top 10 of these, and we're going to create a watch list from tonight and then comment on it when we get finished. So I right-click on gold index, change to index group. Oops, my bad, back. All right, and what it's done here is now ranked the gold products from top to bottom. Now, the first thing, quality usually is above the index. So I'd only look at the first couple, and let's see if there's any interesting on the gold stocks that might be something that I might want to buy. All right, so this will be a very typical pattern that what you see is, there we go, stocks below the 200-day moving average. These have been all in a very deep pullback, despite the fact we've had a lot of kahunas of late. And then what you'll see on Friday was a big up move on volume. So one of these may break out. Now, if gold continues to go up, then Newmont is probably the old standby. American Barracks, or now called Barrick Gold, you'll see a similar pattern, almost identical, deep, deep, deep pullback. Now, I don't like to buy stocks in pullbacks because my concern is, what I'll be looking at here is this. And it's very, if it turns out that it's going to turn around and go straight up, that's really exciting. But keep in mind that these stocks have been really beaten up. Now, one thing about the commodity stocks is they're going to be driven by what happens with the price of gold. So if the dollar's weak, these stocks go up almost regardless. So beaten down, a little bit of a morning star move. Group indexes turned up. A run from 38 to 42 is still over 10%, and that's probably doable. And that's sort of my target on American Barracks. Gold Corp, and you'll see the same pattern, getting up towards that target. It'll be very interesting to watch what happens. Can it get above the 200-day? Whoops, wrong way. I did not want to do that, especially since it takes this machine a little bit longer to do the calculations. One of the leaders has been Randgold, and it's not a cheap stock. It's a $100 stock. And you can see this is what you're going to want to see with the others. It broke above the 200-day moving average, pulled back to the 200, sort of a squeeze going on here with the 8, the 17, and the 200, and took off big with a big force kahuna, everything green, and perhaps of all the charts of gold, if one wants to buy gold, this is one you might want to look at. Now, one thing that I've been doing on some of these expensive stocks is I've been looking at vertical call spreads where I will buy a call perhaps in the money, sell a call 2 strike prices above, and if the stock moves up as I think it will, I'll end up making the strike price, or the how high it goes, minus the delta between the 2 calls, and it's a cheap play because the out of the money call helps defray the cost of my in the money call. It's hard to buy for all of us, 10,000 shares of a stock that's $104. Now, a cheaper stock, and again, it's below the index, but has a similar picture, and it's got a similar picture because it had some very nice earnings. As you can see, it had big earnings per share growth last quarter as Allied Nevada Gold broke above. So this is what you're going to want to see of the others, and if they can hold that 200-day moving average, when you start to look at where these things have come from, I back this up from a machine of much different resolution, so I have to resize everything. If you haven't used the backup function, you're really missing out on something that's just great. So what was I going to do here? I was going to go to a weekly chart, and you can see on a weekly chart that this is a stock, like most of the other gold, was in a big move up until gold peaked, and it's come down. Is this time to start getting long gold? You'll make your own investment decisions, but all we can say is that gold is breaking out. The leaders appear to be breaking out, and if the market continues where it's been the last 10 days, gold's a place you want to be. I'm going to right-click and go back. As I told you, the banks, the major banks, because of their volume, are always up here. Just take a look and see if these are getting anything that I might want to look at or you might want to go look at and buy. As you can see, it's on the right side of the 200-day moving average, which has been support over and over again. Nothing that exciting in my mind. The best bank has always been JP Morgan Chase from a big bank perspective. I'll show you another bank later that's a smaller Texas bank. Do I see anything there that says the stock's about to take off? The answer would be no. It was up 24 cents, but it was up on 16 million shares. So the reason why these show up here is because of the volume. Back. Home builders, boy, a lot to like in this group. Talked about these on the several webinars. A number of choices here. Now the one above the index is Pulte Group, so that's the one that I would immediately go to look at. Extremely strong group of late. And you can see when it gives me the right picture here. Come on, there you go. Certainly a leader in the market. Now let's take a look at what do we see here. We see outstanding earnings per share growth. We see it's a big company with $1 billion of revenue per quarter. We go down. Let me move this out of the way. Sorry about that. We see that it trades at a high multiple of 42, doesn't pay a dividend, but it's growing at more than twice that. So here's a great stock. Everything is green, certainly is a leader. And as you see, everything's green there. And on the high jump, it is not yet at a level that would get me nervous. I'll get nervous when it does this. And those who've been on my calls, this is one of Ian's favorite indicators. When it gets up near the top is when you want to get going, because when it gets up near the top of the range, it's typically going to pull back. All these things looked good. I'll just quickly take a look at a couple of them. I know they're below the index, but this is such a strong group. And you're going to see, lower left, upper right. It's not the tightest of patterns. Again, great earnings per share growth. This one grows at a price to earnings ratio of 32.2, pays a small dividend. So if I was looking in the market to buy on Tuesday, I'd probably throw D.H. Horton into my, we'll make this a group. Let's call this, I'm going to go into my user group, and I'm going to go down here. I'm going to throw it in my trading stock base for Tuesday. I'll throw, I don't know if I threw Pulte or D.H. Horton. I'll throw this one too. And you got to pick one of these, and we'll come back to this group. I'm just going to go back for a second into the gold group, and I want to throw into my watch list of things that we'll talk about perhaps at the end, how things go. And I would probably throw into that watch list, that's not what I want, my bad. Change index group, Newmont, which was the leader, quick add to group Tuesday, and then Randgold, which is probably the one that I like the most. I certainly like it. It's above the 200-day moving average, the kahunas, etc. I'm going to throw that into my Tuesday as well. I'm going to go back. What else do we have up here? Semiconductors. Now, the last time we did this, I said to short Intel. See how I did. I already know the answer, so I wouldn't be showing you if I knew I looked stupid. But it's all right sometimes to pat yourself on the back. If you play back the tape, we looked at the Intel and it was knifing through, and I said, boy, what a great stock to short. It was a great stock to short because everything had turned red here. Its earnings are evaporating from a growth perspective, and it had broken down below the 200-day moving average. And you could see how the 200-day moving average had stopped it several times. But when it broke through here, it's knifed down, probably going to start working its way back up. And it was a positive today. Let me see if there's anything on this list that I thought I'd look at. Yeah, there's a lot of stocks here that look good. Skyworks is one. And you could see a nice move up. It's been basing for a while. And it moved up with a pocket pivot and a big kahuna on Friday. What I don't like about this stock is not much in the way of earnings per share growth. One of the stocks with earnings per share growth is Cirrus Logic. It might be a little bit too far away for us. Pulling back a little bit towards the 17-day. Great earnings per share growth, clearly a leader. I like that one. And then the other one that's a leader in this group is Mellanox. And I don't know what to do with this one. It's probably too far extended, and every time I say that, it runs again on earnings. I wonder when the earnings come out again, because odds are when the earnings come out again, it's going to pop. So let's go down to FinViz, and let's take a look at when the earnings come out for Mellanox. July 18th, so they're already out. So right now, nothing to look at there, okay? Clearly a leader, but becoming a very expensive stock. But a very nice looking group. Move back. Biotech, love these guys, changed to index group. So I put a note on Friday, and you say, oh yeah, it's easy stock. So let me just show you what happened. I like some of these biotechs. I especially like some of these companies who have new drugs coming to market. So here was a, I guess it's a weekly chart. Let me make sure of that. A daily chart, rather, Medivation. And you could see how it was sort of basing and had a huge move on Friday. Well, Friday it had a drug approval. And with that drug approval, Medivation was up 8%, and it was up more. Actually, it's up more after hours, another $2. Now, the neat thing is, it opened up, it pulled back down to about $100, and it ran from there. And this gap occurred after the news came out. There was a stock was halted. Now, the reason why I point this out is not because I think you need to go out and get Medivation. It's probably run, although I think it's going to go up, and I think it's got a high likelihood of being acquired by Astellas. But there are other biotechs that are just like Medivation. So here's Medivation. We talked about this on multiple calls. And why do I like Medivation? Why have I been in it? Because lower left, upper right, tight as you can be, multiple kahunas last week. You think somebody didn't know that this drug was about to be approved? Doesn't make any money because it's a biotech with a pipeline. And what's most interesting with these, and what I've learned, is to look over at this guy here. $3.8 billion market cap. This drug that was approved is potentially a $1 billion a year plus drug. And it's got other drugs in the pipeline, which is why I cared less about the fact that it was $100 and more about the fact that there's a number of these early stage products, companies that are on the market that trade at about a $3 billion market cap. When they get approved, they take off. When they get denied, they sink. Amgen, a lot of people like Amgen. Clearly, it's sort of the big pharma of the biotechs, and it was quiet for a decade. but it's had a very nice move over the last couple of months. Had a pocket pivot on Friday. Get a little bit less there. Oops, sorry about that. A little bit more there. Certainly has been a big leader in the market. Was extended up here and has gone baseline. It's no longer as extended. Not a whole lot of earnings. It pays a dinky little dividend. But if you want to know what the leader is in biotech, it's clearly Amgen right now. Regeneron, interesting company. This guy needs to split its stock. It looks like it's an expensive stock. And as you can see on the weekly chart, it's had a very nice run-up. Would you like to find it back here? But it's not that expensive. It's only expensive because they don't split their stock. If you look at the market cap, it's $14 billion, but they've got multiple marketed products. And look at the earnings per share growth rates here. It trades at a multiple of well, it's not making it because it just went profitable. But even, as I look at it, 91 times 2, say $2 among friends, trades at a multiple of 70 or 80. It's growing much faster than that multiple. Very exciting stock. Unfortunately, a very expensive stock. A couple to keep your eyes on. Onyx Pharmaceuticals just had a recent drug approval. It's that pattern where it got to being expensive here by the high jump. It's gone sideways. The 50-day moving average caught up with it. It had a pocket pivot on Friday. Doesn't make money, but it's got a second approval coming of another drug called regorafenib. It just got approval of carfilzomib, a myeloma drug, and I think this stock may have more to run. It's also a takeover candidate. And then two that are potential big winners. One of them is Ariad. They have a drug for chronic myelogenous leukemia. If I had to handicap the likelihood of getting approved, it's about over 90%. It has a market cap of $3.5 billion. It's had a lower left, upper right, nice move. It doesn't make money. And it's got a PDUFA date, which is the FDA speak for when it will be approved later before the end of this year. So very exciting story, and one that I think is one to keep an eye on. All right. The other one in that category is Pharmacyclics, and I've mentioned that on several of my calls. They make a drug for chronic lymphocytic leukemia, which is the most common cause of leukemia. They've partnered with J&J. They've got other things in their pipeline. This would be their first big deal, $4.6 billion. These drugs have a high likelihood of getting approved. When they get approved, you'll see a run in their stocks like Medivation. There was a question on the board from an Indo about Affymax. I responded to him, but I'll show you what happens when a stock gets approved. I'm just going to go to a weekly. This was more of a crap shot, but you could see it got approved. I think it initially got approved here, and then it moved up again here. So it's a stock that was in the $4 range last November that's now trading at close to 18. I made my comments on the board. I don't need to make any more comments now. So within the biotech, I'd probably look at throwing Regeneron into my group. I might throw Onyx into my group. And, oh, by the way, I still think very highly of Celgene, but because of the purpose today is not to go a 4-hour marathon, I'm going to pass that and go forward. So I'm going to go back to my list. Anything to short, I'm going to go to the force down. And communications, utilities, tobacco, computer storage. I don't understand these stocks. Seagate and highlight them before you click on them. Seagate and Western Digital both had a big fall this week, despite the fact they've got great earnings per share growth coming into the stocks. They may pull back to that 50, which might be a good time to buy, but great earnings per share growth. So that's how I do top-down investing. I then end up with a watch list, and I go back and I follow that list which I build as the week goes by in my piece here. So let's review what I promised you I would do. Oh yeah, there are some shortcuts you can do. So if you follow my other webinars, you'll see that I talk about doing a group performance analysis to see how I did last week. I also do a group inclusion report to get an idea of which are the stocks that are showing up in the highest number of different watch lists that I have. Some of them are mine. A lot of these are published things. TCBI, Alexion, which we talk about in a lot of our meetings. There's that Mellanox. Francesca's Holdings is a retail stock that I have. Apple, Toll Brothers, Ryland Group, Lumber Liquidators, Regeneron, a lot of the same stocks. So the way that I built that list was that I went into Designer, hit Tools, Group Inclusion Report, and then I checked off all the different groups, with the concept being that if the best stocks get into these watch lists, then if you're in a lot of these watch lists, then you must be a really good stock. And then what I do is I make a group from report, and I put the top 60 into a group that is my group inclusion report all-stars. And I do a lot of searching with these and scanning them, looking for signals. So the other thing that I use as a shortcut is some of the smart groups, and I just go into warehouse. If you go up to the top, all right, why are we not going up? Okay. Close that one. You can see a number of groups, and I'm just going to do a quick GIF here. So tools, I got to go to Designer, my bad. Tools, GIF, I'm going to clear, I'm going to open up the smart groups, and I'm going to say that if you had a pocket pivot and you're in some of my favorite groups, Best Criteria, ERG 240, Growth, HGS 100 Leaders, and these are some of the groups that I've used over the years that are the best groups for me. Make group from report, let's go down here. Let's shoot down to that. Whoa, where did I put that? My bad. Tuesday, and then I'm going to make a group there called GIF Smart Groups. Top 10, I'm going to hit OK. It's going to ask if I want an index. I'm going to go GIF 10, GIF 10, save, no index. And what I've now done is I've taken the top 10 stocks that, and a lot of these are the same stocks we just saw, TCBI, Ryland, Toll Brothers, Mellanox, Alexion, Pull2 we've looked at. But more important, I've now created a group that I can go back to, and let's just take a look at them very quickly before I move on and show you a special treat. And hopefully Ian will, hopefully Ian didn't post something today. I didn't see one earlier. So let's go and find my list here. Go down here to my weekend chart review, weekend bulls. That's not the one I want. I'm sorry. Trading base Tuesday. Let's look at that. Turn off my filter. All right, let's take a look at the stocks that we pulled out from that quick GIF. If you got 10 minutes to do, all you got to do is go into a GIF on that smart groups, and let's see if we pick some winners. Alexion, long in the tooth for my taste, but this is one that I've been in and out of. It is a powerhouse in biotech. You can see 24 to 104 in 2 years. What a great little company that one has been in the biotech space. Cadence Design, don't know anything about this stock except you're going to see it's had a nice move here. Got some decent earnings. application software, trades at a multiple of 26, no dividend. A very nice, powerful move, 2 pocket pivots and forced kahunas in the last 4 days, something to pay attention to. CVR Energy gets lumped in with the refiner space. I think this is an ethanol play and a refiner. And this has just been a very hot group. It's not my favorite in the group. Not exactly sure why it made all these lists. I guess it's the pocket pivot. Didn't hurt. We don't really care about that. Mellanox we looked at before, big leader, made our list again. Pulte made our list, homeowner. Ryland Group made our list, home builder rather. Standard Pacific, also a home builder, a cheap one, as you'll see. You get a thought here that maybe there's a wolf pack of home builders. And I mentioned I would show you an interesting looking bank, lower left, upper right, Texas Capital Bank shares, great earnings per share growth. Not a giant bank, certainly not as big as some of the others. Must have less exposure to mortgages because it's just done great. Running right up with the 200, the 50, the 17, the 8, sort of like railroad tracks, certainly a great leader. All right, so those are some of the shortcuts, and as I said, I got a treat for you tonight. I'm just trying to get my bearings, sorry for taking a breath here. So one of the things that Ann has taught us is that when the market is getting towards the top, that you can put together a basket of leaders, and perhaps those leaders will turn over and give you a heads up that the market's going to roll. So I spent part of today developing my list. Now the things we want to do, we want these to be medium to big stocks. I don't want little stocks, nothing less than 10 bucks, nothing with less than 250,000 shares of volume. I don't want to have more than 2 or 3 in any single industry. And I want them, for the most part, to be tight in going from the lower left to the upper right-hand corner. So I'm going to look at that right now. But before I go there, I just want to mention Ghilardi Sprinters. Another way of finding stocks easily is to go into the view, go into HTSI Strategies, Woodward and Brown, Reference Library. I never look at it up here, so let's see if I can even find them here. I'm not going to spend all day looking for them there. We'll post on the board where they are. But David Ghilardi has something that he calls sprinters. And if I just put them on all securities, it gives me 117 stocks. And without any other massaging, I get my refiners, I get some home builders, I get biotech. The strength of the market comes right to the top. So you can get a very quick analysis of what's moving just by dumping in the appropriate view. So what I wanted to show you and what was exciting to me is this. So as I said, I've looked through to find the best of the best, and here is my index of leaders for today. Let me make sure I got all my filters off here. No filter. For 2000, for Labor Day 2012, and I can't, and that's, hold on, that might be the wrong index. Here it is. Here's my Leaders Index 2012. I knew there was a few more. And what I have done is I pulled the best of the best. And I'm going to go through them very quickly and then show you why I chose this as to be my watch list, and then we'll say good night. So the first thing is apparel retail, biotech, home building, refiners, strength of the market. Now we're going to see why these things are the strength of the market. Gap, whoops, not yet, slow computer. You know, not totally lower left to upper right, but certainly a leader has gone from 28 to 36, and a leader within retail. A perfect looking chart, although it's actually gone to red bongos, as Ross Stores been in this a little while. I know Lou Powers' wife picked this up before any of us did in the HGSI world. By the way, Lou's book is now out if you haven't already purchased a copy. The Ultimate Software Group, as you'll see, an ultimate looking lower left, upper right chart. Avid Pharmaceuticals, we've already talked about this one today, one of those up-and-comer upstart biotechs. Medivation, clearly a leader, lower left, upper right-hand corner. Pharmacyclics, so those were 3 in the biotech space. There were 7 or 8 on my first blush through. 3D Systems is a technology play, but I think they do something to do with the energy industry, providing technology for the energy industry, looking, well, I guess not. Manufacturing solutions, time and cost designing products, but clearly a lower left, upper right. And I'm just looking at here for charts to show you why I put them in. Discover Financial Services, not as clean, and probably I should take this one out of the list, which I will when we get done. Express Scripts, a little bit rocky, not tight, but a leader in the healthcare services business, and it's been in a very nice run since June when they closed an acquisition of Merck Medco. Lumber Liquidators stepped up here with some earnings beats, but lower left, upper right-hand corner. A couple of home builders, Ryland Group, I just picked, I could have picked a lot of different ones. Toll Brothers, could have been Pulte, could have been some of the others. Gaylord Entertainment, I've never had an entertainment company in this, but certainly it's been a nice mover, and I'll probably take this one out now too, Gaylord and Discover. Not that it's bad, but it's not as good as the others. eBay, online retailer, moving very nicely. Equinix, which is the ultimate tight lower left, upper right-hand corner. Belk, a refiner. Western Refiner, a little bit loose, but certainly moving up nicely over the last 4 months. And there's our Texas Capital Bank shares. So I'm going to go into my designer, and I am going to take out the things I said we're going to take out. Yes, I am talking to myself a lot today. So I'm going to go here, and I'm going to take out Discover, and I'm going to take out Gaylord. I don't think I showed you OCN, so let me just show you the OCN chart real quick. Oh God, I skipped the best. So this is Owen Financial, big move, lower left, upper right hand corner, thrift and mortgage finance. Sherwin-Williams, yes, Sherwin-Williams. How many of you have run this up? Non-stop. Looks like Ross Stores just keeps going up and up and up. We've already talked about Mellanox, and then Brinker, also nice pattern. So this, I'm going to take Brinker out. I don't think it's as nice as the others, and so I'm going to go Designer, remove it. All right, so I am left with, including the index, 20 stocks. And the reason why we put this together is I'm going to find that index. I'm going to move it so I look at it every day, because this is an index of leaders, 19 stocks, multiple different industries. It is tracking above the 8-day exponential moving average, and what we have learned is this will turn before the market dies. And when this dies, you get out of the market. So this is my early warning gift to everybody. I will post it on the board. Just to give you an idea of prior indexes, Ian put this one together like I did tonight in a newsletter before the October meeting last year. We'll come back and look at these in a second before we say goodnight. And doesn't look like leaders now, does it? But let's go back in time. I don't have enough data loaded, but it looked like this prior to that last meeting, and you could see that it had rolled over before it took off again. But when you want to watch this in that list I gave you, because you're looking for this, because this is when it's time to get out of the market. And March would have been, late March, early April would have been a good time to cook your profits from the beginning this year. That was 925. This is one that we put together in March. And let's go backwards. As you could see, a very tight, just like I put together tonight. And it died. And that was a time to think about getting out of the market, and the market really has changed its character. So these were the greatest leaders in the market, and they die. When they die, the market dies. So on that note, I just want to remind everybody of a couple of key things. First thing, can't say enough, if you've never been to this meeting, you don't know what you're missing. Come to PV. I will put on the web my HGSI presentation on Magenta Trader. I'll have invites as well as a link. And in that, I will say good night. And please send feedback to George and I about this format. Everybody have a great night and a happy Labor Day, and take care. Thank you.